Every year, the government loses billions to tax fraud. Curious how people, including the wealthy, get away with it? Keep watching. Hi, welcome back to the channel where I explain everything related to financial crimes. In today's video, we're diving into tax evasion and tax fraud. Here's what we'll cover. What is tax fraud or tax evasion? And what happens when you commit tax fraud or tax evasion? And how the rich avoid paying taxes. Let's dive right into it. What is tax evasion or tax fraud and how do they differ? Most likely when you think about tax fraud, you think of people not being honest about how much money they make. But this is not the most common way. The most common form of tax fraud occurs when someone can't pay their taxes. A lot of people with a business also commit tax fraud by stating something as a business expense to not have to pay taxes over. These are minor infractions that the authorities often overlook. The difference is once a person stops paying their taxes. So now we'll talk about the consequences of tax fraud. When you can't pay your taxes, the IRS is generally lenient if you make an effort to pay off your debt. Trouble begins when you refuse to pay or file your taxes. This is also known as failure to file or to pay. When you do this and wait about 2 months, you will start to get phone calls about your taxes. If you ignore this and wait another month, the IRS may visit your home, seize your assets and withdraw money from your bank account. If you continue to refuse payments, they can revoke your passport and social security. Once this happens, they will try to arrest you for tax fraud. If you file and pay your taxes but lie on your return, you can also be arrested and/or fined. The size of your punishment is of course in correlation with the amount of money you hid and why it happened. Now we'll talk about how the rich do it. The rich avoid taxes by using legal loopholes to minimize their tax burden. One major strategy is exploiting the difference between income tax and capital gains tax. Income tax is paid on your salary while capital gains tax is paid on profits from investments like stocks. Income tax is about double the amount of capital gains tax. This means if you earn 80,000 from a job, you'll roughly pay 16,000 in taxes. But if you earn the same amount through capital gains, you'll pay about half that. Over the years, this has become more fair. But if you're wealthy and want to avoid capital gains tax, you can take loans against your stock holdings. The loan interest is tax deductible, and since you don't sell stock, there's no taxable event. Using this method, you avoid taxes, and upon your death, your children will inherit the stocks through a trust, bypassing inheritance tax and resetting capital gains tax to zero. This is also known as the buy, borrow, die method. Even with all these cool write-offs, there are still options to avoid paying taxes. But first, I want to ask you to subscribe to my channel and hit the like button. Next, let's discuss the most well-known method used by the rich to avoid taxes. You've likely heard of tax havens, countries like Malta or Dubai that have low or no income or capital gains tax, attracting wealthy individuals. These countries lower their taxes to attract wealth. All you need to do is establish residency or headquarters there. I hope this video made you aware of the risks and possibilities of tax fraud and tax evasion. I do not endorse these practices, my goal is to educate. If you enjoyed this video, please subscribe and help me grow this channel and to spread awareness about financial crimes. Thank you for watching, see you in the next video, bye.